Ladies and gentlemen, open banking pioneers, a very warm welcome and thank you for joining us around our virtual campfire, and a special OBE welcome to our FinTech Scotland clan. They are joining us today as part of their FinTech Scotland Festival Month, so I'm delighted to welcome them along as well. Now, many of you will know that we had our first OBE, and that was actually hosted by FinTech Scotland. And you may have heard me tell the story of 38 FinTechs gathered in a room, all drinking warm wine served by guys in kilts. This was all sponsored by FinTech Scotland. So we gathered like-minded pioneers, all wanting to form a tribe, a family. And from there, we've grown into a global community of thousands around the world. So it's truly humbling. So thank you. And I am super proud that we've got another first to talk about today as well. Around your screen, as always, you'll see Karina, the very talented Karina, graphically recording the very generous insights that our panel are about to share. But also, for the first time ever, we are able to demonstrate payment initiation to make a charity donation. This beautifully brings together some of our core beliefs. One, we believe that open banking payments should be ubiquitous. Two, that innovation drives collaboration. And a very personal one for me is karma. And fourth, as we all know, that most good ideas are formed over a drink, as this one was. So we have been on hundreds of lockdown calls we've been on hundreds of calls, Zoom calls, Google Meets, and team calls throughout lockdown. So please have some fun during the next hour. You can use your phone, scan in the QR code, and make a charity donation, all by open banking. How cool is that? And it's a beautiful piece of commercial karma too. Now, OBE have three charities, and I just want to spend a moment to talk to you about them. My Bank, supporting their in-school program, educating children on financial literacy. SAFA, support our brave ex-servicemen. Our heroes often leave the services and require financial support and a lot of mentoring, and we are working with them on that program. And finally, East Anglia Children's Hospice. We are all running ourselves ragged, Zoom call after Zoom call, and very excited about our future. Those children, they literally don't have a tomorrow. So go on, please, have some fun, scan in your QR code and make an open banking payment. I'd like to give a huge shout out to Moneyhub. We've Sam on our panel today. Now, thank you, Sam, for the open banking part. And they've included one of their charities too. And also, I'd like to say thank you to Striva for their cool API. Think open banking gift aid, Striva call it Swift Aid. So demonstrating that innovation really does drive collaboration. Now, this is a theme you'll hear me talking about quite a lot. And that's because we're launching our Open Finance Appathon. Now, this is a competition for startups and scale-ups to develop market-ready product using the APIs that you can see at the top of your screen. We've already had the FinTech Commissioner for Canada reaching out to us today, so we're very, very excited around the reach this is getting. So please help us and share more around the Open Finance Appathon. So moving to our panel today. Now, as you can see, during the summer, we've been very busy with our Open Finance Appathon and our QR code, but we also, very importantly, undertook a huge piece of research. And that was to talk to you, our community, about what you wanted. And you told us that open finance, wealth and pensions was a very, very firm favorite. We heard you. Okay, so I am delighted to introduce Josephine Cumbo, the global correspondent for the FT. Now, she has agreed to be our guest host. Now, she'll be asking questions from Slido, so please don't be shy. We'd like you to help us shape this conversation. Now, this isn't the Helen show, and I have probably done more talking than I normally do. So I'm going to ask Josephine to introduce our panel of industry experts. So all I'm going to say is stand by for some amazing insight. Josephine, over to you.
Thanks very much, Helen, and hello everyone. As Helen said, I'm Josephine Cumbo, the Global Pensions Correspondent at the Financial Times based in London. I'm really pleased to be here with you today for this discussion about what role open finance can play in the pensions and wealth sectors here in the UK. Now, my job is to try and keep everybody to time, but also to get as many questions of yours as possible to our panel of speakers, our excellent panel who I'll be introducing in just a few moments. But before we kick off, just a little bit of background on the economic and financial situation facing the pensions and wealth sectors in this country. Now, I think me here in London and anywhere else in the UK and around the world, we've probably got something in common, and that is that our countries are facing a retirement savings crisis, and that really is driven by population ageing and a decline in birth rates. But also the problem is getting a lot worse for individuals who are increasingly having to take on the burden of saving into their pensions, investing them wisely, and also making that money that they managed to accumulate last. Now, faced with all those challenges, most people struggle to make very good decisions, given that the World Economic Forum recently put out some statistics that men in this country, in the UK, are likely to outlive their retirement savings by 10 years, and the situation is far worse for women in this country who retire with less money and live longer. Now, in the UK, open banking was established 2 years ago, and the regulator here has been sort of investigating whether it can be expanded into pensions and wealth sectors. There's around £6 trillion worth of pension wealth in this country. So there's certainly lots of opportunities for businesses in this area, but the industry has to be very careful about how it develops in terms of the pensions and wealth markets, given the risk for consumers with pensions being their biggest savings pots that most people will have. So that's the focus of our discussion today. Before I introduce you to our speakers, just another reminder that there will be an opportunity for you to put questions to the panel. And if you can do so, there is a little box on the bottom of your screen. So that's the end of my introduction, and I'd like to hand over to Aileen for the first of the introductions.
Hi there, hi. Lovely to meet everybody virtually. My name is Aileen Mathieson. I'm the Global Head of Insurance for Aberdeen Standard Investments, and I'm also responsible for our DC proposition for the UK.
Thank you, Aileen. Samantha, is she with us?
Thanks. Hi everyone. I'm Sam Seaton, the CEO for Moneyhub, and Moneyhub really is all about open finance. It's about exactly as Josephine was saying earlier. It's really about getting everyone into the fields of financial wellness, and to do that, as we all know, you need to save into your retirement fund, and you need to get yourself onto the road for financial freedom. I guess is the word we all talk about a lot. So that's what we're all about, really.
I should say g'day to Sam, another fellow Australian. Passing on now to Daniel Globerson.
Hello, and certainly a thank you to Joe and Helen for inviting me, and to all of you for taking part in our session. My name is Daniel Globerson. I'm the head of open banking at NatWest Group. NatWest Group, we represent many brands that many people are familiar with, obviously NatWest, Royal Bank of Scotland, Coutts, Ulster, and many others across Europe, and with a few outposts around the world as well. And for us, open banking has been a great journey from both a regulatory perspective, from a customer engagement perspective, and we're really thrilled to be part of the conversation on wealth and pensions.
Thank you, Daniel. Francesco.
Hi, everyone. Thanks for hosting me today. My name is Francesco Simoneschi. I'm the CEO of TrueLayer. We are a startup based in London. What we do, we make it simple to integrate with financial services like open banking and open finance. And we want to do that in any app, any website, anywhere in the world. Our mission is to open up finance so that businesses can innovate and consumers have more control over their finances.
Hello, Ross, can you hear me?
Sorry, Josephine, I wasn't good at reading there. Apologies. Hi, I'm Ross Laurie, and thanks for having me on. I was actually at that first event with Helen, so it's first time on the show, I suppose. But it's amazing how big this has become from, you know, a bunch of folk in a room drinking warm wine a couple of years ago to this enormous thing now. So well done to Helen and the team for achieving that in the first place. So I'm Ross Laurie. I'm Chief Executive of a software business that sells software into the financial advice market. And we use open banking as part of our enriched income and expenditure reports that we provide directly into back offices.
Thank you very much, Ross. And finally, Dan.
Hi, Josephine. Pleasure to be with you today, especially after today's local lockdown announcements in Newcastle. I'm now not allowed to mix with anybody apart from the house, so it's nice to have 1,000 or so friends and guests today. I'm Chief Executive of True Potential. True Potential work with about 4,000 financial advisors throughout the United Kingdom with about 1.3 million private client records. As a platform, pension and ISA manager, we also manage £12 billion of client money directly via our discretionary service.
Excellent, thanks very much, Dan. So time now to kick off with our first question for the panel. And that is a very straightforward question on how can open finance moving into the pensions and wealth sectors improve outcomes for consumers. And I'd like to put that to Sam first to get us started.
Well, it's pretty fundamental actually, because without clarity, I don't think you can gain control of your finances. And traditionally, wealth management has been less than transparent is the word I would like to use. So the technology, open banking, has really made inroads to surfacing for consumers, you know, what it is that they are using their money for, where it's going, why, how, and open finance extends that beyond their current accounts, credit cards, into pensions, investments, onto the platforms, what is actually happening, where their money is going, how much it's costing. You know, we were on a panel recently where we had, you know, 4 28 to 32-year-olds. They already had 5 pension pots between them, as in each of them already. And I think that isn't going to change. So being able to give people visibility over their money is one of the biggest things we've seen open finance enabling, really.
Can you hear me now? That's a little problem here. Yeah, I'd like to move to Dan now, True Potential. Dan, one of the problems that we have in this country, and one of the reasons why people aren't making great decisions or not saving enough, is that they're not getting advice. What role could open finance play in helping people get access to advice?
I agree with Sam that the starting point is about the transparency, which puts the client in control of their financial picture. You mentioned at the start, Josephine, there's £6 trillion of investment or pension assets out there. And then if you boil that down further, there's about 15 to 20 billion pounds of even unclaimed or unserviced pension assets out there at a really approximate guess. So I think there's a great starting point before you even look for an advisor. I think what the consumer wants, and what I love about open banking, is the ability to have everything in one place, to finally put that client kind of in control of their information, but where their assets actually sit.
Thank you. Just moving on to Ross now. Ross, what could open finance offer consumers, particularly in pensions, when it comes to how they experience? I mean, it's quite a clunky experience now. It takes a long time to get hold of your information. it certainly seems as though it's in the 21st century. You can't even get information about your pensions very easily on your app. I mean, could that transform if pensions were to open up?
Well, I mean, yes. I mean, as Sam said, but the biggest problem is that people just don't know. I mean, I think there was a report out last year that said that the average pension report at the moment would leave people to about £13,000 a year in retirement, and they don't know it, obviously. So, or they don't know it easily. But with my own hat on, we're dealing more with the financial advisor market, and luckily those customers are served. Now, that's only 1 in 10 of the UK population. But in terms of how they can benefit from the software we're building, there's still a number of processes in the financial advice market which are just manual. They're not even partially digitized. It's just, it's literally a questionnaire or a form fill, or can you bring in 3 months bank statements? Things like open banking can help with that. We can now allow the advisor just to send out a link. The customer can then log in and we'll feed that information categorized into their back office. So instantly the advisor can be spending that first conversation with the customer, giving them advice, rather than an hour or so asking 101 questions. And it's obviously got to be better for the customer, but it's better for our customer, of course, who's the financial advisor, who not only gets that data to give the advice, but they've got their all their compliance responsibilities covered off as well, because of course, they've not just got things like open banking and PSD2 to deal with, they have MiFID 2 to deal with in terms of the reporting. And I suppose we're coming full circle with these digital tools, because there was a lot more customers getting advice pre-retail distribution review in 2012. And as a result of that sort of reduced the advisor market in terms of the numbers. So we're sort of coming full circle now, that something that was relatively okay handled is now going to come back to being okay handled thanks to regulatory updates and technology updates.
Thank you there, Ross. Just moving on to Francesco, what's your take on how open finance might improve outcomes for consumers, particularly people saving for retirement?
There's quite a few experts about pension on this panel. So I want to move the attention a little bit on wealth management, which is something that at TrueLayer we had a pretty hands-on experience, given that we work with some of the leaders in this space, at least from a fintech perspective, like companies like NatWest, Free Trade, Stake, Cheap, Plum, and quite a few others. And what we learned is that this is not theoretical. Like, this is something that can happen right now, and open banking is enabling those sorts of use cases. And we identified 3 main areas. The first one is improving the quality of user experience and insights. And this is fundamental to create a habit into consumers about saving money, about be really aware of the importance of saving now for the future, and how to allocate in the right way, in the right balance, and within the full financial picture of whatever is their earnings. The second really practical part is account top up. At the end of the day, you need to select a firm or a service that helps you to save and invest that money. And we have seen that open banking brings down that sort of barrier between your main high street bank account and this wealth of services that can help you out to invest and allocate your money efficiently. And so this brings cost saving to those wealth manager firms and brings operational efficiency. This is thanks to payment initiation. This is bank to bank transfers. And we have a lot of examples and operational history into that. The third bit is streamlining onboarding. And again, it goes inside of this big topic of friction. Whenever there is friction, consumers are prevented to access the best opportunity to invest their money. Removing friction, it means liberating money. It means enabling consumer and customers to be more aware and increase the number of services that they can use. And so with open banking and open finance, what you can do is to streamline bank account verification, streamline fact checking, streamline a number of paperworks that are usually required in order for you to onboard into new services.
Thank you very much there, Francesco. And it'd be interesting to have a discussion later on whether you think those cost efficiencies might end up in being passed on to the customer at the end of the day. That would be better for customers because costs do impact your retirement saving returns. So lastly, I'd like to pass on to Daniel of NatWest. NatWest has already had direct experience with open banking. So Daniel, what do you think that the expansion of open finance into pensions and wealth sectors, what difference might it make to your customers?
Well, I think the open concept is incredibly important for us, and we've had some experience as Francesco, as Dan and Ross have mentioned, as have Sam in the UK, with the benefits of open banking in terms of sharing current account and card data, and how that's beginning to help the public and our customers understand the financial picture, understand how to create savings, understand how to get better deals. And I think the whole open concept is one that drives, firstly, innovation, and secondly, competition. And so from that perspective, I think there's a massive opportunity for innovation followed by competition in the pension sector. We've had some experts here just now talk a little bit about the challenges of knowing where one's pension is located, and even from there, understanding what the performance of the pension is. I think wealth is probably a little bit different than pensions, maybe in my mind, at least, in that the pensions opportunity, I think, touches the vast majority of the public and of our customer base. In terms of wealth, I think historically we think of wealth as a more limited customer segment in some cases in the world of finance. But actually, if we were to flip that on its side, I think through digitization and innovation, we could bring higher end wealth services to the masses so that wealth management would be an opportunity for far more people than fewer. And I think by having these open channels, by allowing the public and our customers to share their data, and by allowing our customers to initiate transfers of funds between providers, I think that can only end up in with benefits for consumers far and wide.
Thanks very much there, Dan. I'd like to move on to our second topic of discussion. I'm already getting questions coming in, which is great to see. So keep on firing off those questions. We'll put them to the panel in just a few moments when we're ready, when we're done. So the next question really it's about the sort of practical, a practical question about the sort of barriers to expanding open finance into the pensions and wealth markets. Now, unlike bank products, which are relatively simple, pensions can be quite a headache, and we know that because there's a lot of complexity in pension products. There's lots of different types of products, and the market isn't digitized. We've got accounts that are sitting in boxes, which aren't even, we don't still have paper records for. So these are presenting big issues for a move to get all that information into a form that will be accessible to customers. So I think I'll put the first question to Ross. If you could just pinpoint the big sort of legal, the barriers you think to open finance really rolling out into pensions and wealth.
I think the barriers are it's a big question. I mean, the first thought on this is the open banking's barriers were sort of helped through the barricades, shall we say, by legislation pushing that forward. And interestingly, when we look at things like pensions dashboard, there's a recent poll, there's 200,000 signatures of people requested that to happen. So you've got one starting from a position of regulatory change or government-led decision-making being pushed through quickly, and another one which has got the consumer saying, we want this, maybe not going through as quickly. Now, so the barriers, as far as I can see, must be sort of organizational, because regulatory challenges have always been there, and I assume will be accelerated in terms of how we get through them. as a result of things of COVID-19. But I would have thought that the main challenge is going to be organisational. I suppose another challenge might just be in terms of understanding that in order to get to a position of open finance, there's a whole problem of what do we do with that customer data? And that's maybe an open identity challenge, a federated identity challenge that needs to be addressed along with this. And then lastly on it, I think we kind of need to recognise the strengths and weaknesses of each sector. You know, banking is very different from wealth and pensions. And as Daniel's pointed out, wealth and pensions are different things. And then we've got investments and savings, and then we've got assets, and then we've got credit. So there's almost a need to get to a position of a personal balance sheet. What the elements of that are required, and how do they all work together in some sort of synergistic fashion to achieve ultimately putting the customer at the centre of this, right? Because that's where it all started. So in summary, organisational.
Thanks very much, Ross. I'd like to address Sam. Sam, you've been working on the pensions dashboard project, which is really trying to get things moving in terms of getting a system for millions of people in this country to see their pension pots all in one place. Sam, I just want to know, with the hundreds of pension providers out there, we're not just talking about 9 banks that open banking sort of dealt with, we're talking about hundreds of companies. And how big a challenge is it to get all of that data into a form that is usable?
Well, I think it's probably similar in the challenge that we have with open banking, because the CMA9, which represented about 80% of the current account market, were targeted first with the PSD2 legislation in the UK, but it didn't exclude, the PSD2 legislation has not excluded the remaining 20%, which had to follow on, after the CMA9, kicked off. So it's very similar to in the pensions world. There are 12 main pension providers that cover 80% of pensions in the UK. So clearly, the staging and prioritization of data and I guess the effort that will go into try and getting, that up and running is something that the pensions dashboard is looking at. But fundamentally, you can't have legislation where an employer is legislated to actually contribute to people's pensions, and I, as an employee, are also having by law to contribute to my pension. And then when I get to retirement, have no way of knowing what money has gone where and where it is for me to draw down on my retirement. I mean, that isn't something that we can do. So going back to these unclaimed pots that Dan was speaking about before, that is just not sustainable. So it's kind of it would be a criminal act for us to do that. So it's non-negotiable, the pension dashboard. And you're right, some of the companies are going to struggle. I heard of one the other day where actually the records were burnt in a fire, so they don't exist. So there are challenges without doubt in terms of getting this, but let's be clear, 80% of people's pensions are covered by 12 providers.
Okay, thanks very much, Sam. I'd like to put a question to Dan now, specifically around governance issues. I mean, pension products are not quite like bank accounts. There are sort of things attached to them which might mean that someone is better off keeping that pension with the existing provider rather than moving it somewhere else. For example, the charges, there might be a guarantee on it. So the question really is, how do you make the market work well for consumers when pensions really are tricky products?
Thanks, Josephine. I couldn't agree more as well. When you talk about a pension, it's probably the most unnecessarily complex thing going. And decade after decade, they've just added new spins to pensions, new variations on them. As Sam's mentioned, we've now got workplace pensions, which now follow you or don't follow you around. But on average, an employer moves every 3 years or so. So by the end of somebody reaching retirement, in the situation Sam's talking about there, they could have 5 to 10 different workplace schemes dotted around as well, and no ability to join them up. I couldn't agree more with you as well that giving clients the ability to freely switch a pension around using kind of open architecture could be really dangerous. You could unravel tons of legislation. You could unravel some really good financial advice given at the point of sale as well. I think you could go a lot deeper. This is a subject for a whole of a day. And really one of the things we lobby government about is just about bringing one simple product out, almost doing away with pensions and just one simple investment vehicle for clients. Same tax treatment throughout, same kind of maximum or minimum savings amounts in there. And if you just cut away all of that, life would be nirvana, but that's real wishful thinking out there. I think just to kind of, I suppose, endorse what Ross is saying and Sam as well. I think the only way we're going to overcome the barrier, the only reason banks did open banking was because they were compelled to. They didn't do it as a charity, they did it because the law said so. As Sam said, 80% of pension assets sit with 12 of them. Just compel them to do it. There is a vested interest, I'll not be too controversial today, about dormant pensions or unserviced pensions out there, which are either in high charging or underperforming product out there as well. So it could be old-fashioned pensions, as Sam said, they could even be burned paper files now. They could be in very expensive legacy funds there as well. So the UK consumers losing money right now in poorly performing products. And make no bones about that, some of the 12 organisations which Sam mentioned there, they make a lot of money from that consumer apathy.
Thanks very much there, Dan. I'd like to put a question now to Dan. We're getting a lot of questions, in particularly on this topic of pension providers just not being quite ready, compulsion, etc. I'll put a question that's come into you, Dan of NatWest. I'm just going to pull it up now, and that's, given how technologically behind pension providers are, how long do you think it would feasibly take to introduce any form of open standards to the industry?
I think that's a really great, insightful question. And it's one that I think we've talked about a few times in the past, which is that even in scenarios where financial products and customer channels are fully digital, for instance, current accounts as we've evolved over the years, it's still quite an undertaking to agree to a standard, apply a standard, and invest in the infrastructure required to externalize all these data, information, payments, and all the security around it. Is no small undertaking, even for the large banks who have fully digital journeys. And getting back to your point, it's even bigger undertaking if we're starting from a scenario where some providers, other than the 12, for instance, some subset of those providers may not have a full digital journey, may even not have a partial digital journey. And in the worst cases, I think we've had a few examples of where there's physical storage of documents, which takes us into a little bit into the Stone Age. I do not think that prevents us from setting up a standard. Setting up standards doesn't require all participants, it requires most participants. And we learned that from open banking, where the 9 large banks with the support of our Competition and Markets Authority, strongly suggested that we set up a standard, and that standard has been adopted by a fair number of smaller institutions as well. So I think it's perfectly feasible to set up a standard. I probably do wonder a little bit if what the right thing to do is for those who hold pensions with administrators or providers that don't have a digital capability. And inevitably, moving away from the standard, do we end up creating islands of capability where if you're one of the haves and you happen to have a pension with a big provider that's applied a standard, that's willingly or under regulatory direction open this up, that you can really move around and do some great things. However, if you're off piste, I'll say, and you're with the other 20% of the market, which in all likelihood is hundreds and hundreds, if not thousands of administrators, if that means one doesn't have access to that, that seems a bit unfair, really. And potentially, without that level of transparency, it might be that 20% have the most to gain. And so I think that's something that we need to recognize, is that it's going to be a step harder than open banking, where we're effectively externalizing what's already digital, and into a place that we're going to have to find a way to digitize those who aren't. Conceptually, that could lead to some industry consolidation and other opportunities, which might also be great for those holding pensions.
Thank you very much.
Thank you, Joe.
Francesco, there's been quite a few issues brought to the fore there about the challenges for open finance moving into pensions and wealth sectors. What's your top two areas which you see are barriers for the sector at the moment?
I think this is once again a case of aligning incentives, and those incentives are consumers, customers, with all the different, in this case, pension providers or the broader extent of financial institutions. And they, of course, they have different features, like some are established, some others are challengers. And so you are trying to increase competition, and of course, that creates a number of problems. Like we just said, that this is an industry that is highly concentrated into fewer institutions. They have fewer incentive to actually start this kind of innovation. So we're going back to very similar problem we had with open banking. How do we design those incentives? And I think we can do probably slightly better than what we have done with open banking. Open banking was very regulatory heavy. So you have seen a regulator, the Treasury, stepping in, mandating, organizing, and that created some shortcoming into the actual deliverables. Like the products that bank build are probably 80% there. They are missing very valuable features. And so I think we need to create a slightly different framework this time around. We need to have the regulator to ignite the process and push the market into that direction, but we need to leave it open, a little bit of space also for business model innovation. We need to realign incentives. We need to make sure that everyone has also a financial incentive into building open finance infrastructure this time around. And so I think also the regulator needs to get a little bit more, I would say, an approach that is more sensible toward testing first and maybe regulating a little bit after, and letting the market organize by themselves under their oversight. I think there must be struck a balance between those two forces, like a commercial element and a regulatory oversight. Still, if we look at open banking, that may be a more narrow focus within open finance, those shortcomings are quite visible. I think about, we are still missing an identity product in this space. Your bank data is now portable, but your identity, it's not portable yet. And so what we can do in that direction? When we opened up the bank account and payments from your bank account, there are a number of use cases that are out there. For instance, helping consumers saving money in a very recurring fashion, very contextual fashion, that they are being left out. So we need a form of variable recurring payment. And again, we need to have the regulator creating that sort of master framework where also banks and financial institutions can also benefit more directly from this kind of innovation.
Thank you very much, Francesco. We've got quite a few questions coming. So what I'm going to do now is actually turn to those questions so that our viewers out there get a chance to have their questions put to the panel here today. And one of the questions, it's quite an important one too, and it's pretty relevant to the pensions market, and that's, how do you ensure that there is financial inclusion right across the board, particularly for people who aren't online or using digital services, or a little bit afraid of or don't trust using digital services? So I just want to put to the panel the question, which is from our viewer. It is, here we go. How vital is implementing a proper digital identity service for all UK citizens to ensure fairness and inclusion across financial services? If I could put that to Ross to start with.
Yeah, we missed a trick on that a few years ago with the identity card, I think. Although actually we probably didn't, because we'd have done it wrong. Yeah, I mean, I mentioned this before, and Francesco just mentioned it there as well. It's that sort of portability of identity that is the sort of the main challenge, or the main solution for open finance, actually, because you know, until we've got somewhere to store and actually allow the customer to monetize that data as well. Because remember, most companies that store your data are making money from it in some way. And I'm not suggesting that's what the banks or wealth institutions do, but you know, generally, once we can start getting people into that position, it does allow us to accelerate a lot more other things. Because if you think of a sort of symbiotic financial services ecosystem, right, which we live in at the moment, it's just not all quite digitized yet. Where you got, as I mentioned before, banking, credit, pensions, savings, assets, you know, your crypto collection for all we know. If you want to try and understand what your position is for retirement, you need to be able to understand both what all your assets are and what all your likely expenditures are likely to be for however long you think you're likely to live. And that's an important question to start to ask yourself first as well, by the way, when it comes to planning. What age am I going to get to? That's difficult. So I think, and actually, there's other data sets out there that could help inform and improve your chances of living longer. So if we can start off by finding some sort of, I think, federated identity store, which is going to have some sort of government involvement in it, because one, to make it legitimate, and two, to make it actually allowed into the system in the first place. It's such a bigger, more grown-up conversation than just open finance, though. It takes every part of life into account, and indeed may be driven forward because of the pandemic, because we're going to have some way to prove that we're immune if we get vaccines in the future, you know? So these things that I thought might take 10, 15 years to happen might happen much quicker than we thought. But once you've got that, then all these other elements can start putting their digitized content into it. And actually that might show some up. So if you've got banking in there, fine, and there's other elements in there, but there's one key part of the system not playing ball, well, the effort can be targeted at that and helping it get into the system in the first place. But I suppose you've got to keep going back to, this is all about putting the customer first. So it seems a bit odd to not be putting the customer identity first when we start trying to plan how all the systems work around it.
Thank you. Aileen, I'd like you to address this question, and particularly I want to know what your thoughts are on whether there will be a reluctance by customers to embrace open pensions if they don't trust them, if there isn't this sort of portable digital identity service that they can use and that they trust. Is it going to slow the development of the market?
Well, to be honest, I think the benefit of open banking and finances, it puts the control back in the hands of the actual client. So the client can choose which accounts are linked in, the client can choose who gets to see their financial affairs and so on. And I think that makes a big difference. So rather than handing all your information off to somebody else, you actually keep control yourself. And if for any reason you lose trust in your provider, then you can easily turn that off and you can go somewhere else in terms of how you use an open banking solution. So I think it should help.
Thank you very much, Aileen. I've got another question now, which I'd like to put to Dan NatWest, and the question is, one moment, now that open banking has proven its value for the industry, are pension providers and wealth managers willing to open up their APIs too, and what's in it for them?
Another great question. So, and I suppose my initial response just on the question would be that I think open banking, we're at the very beginning rather than the end of the innovation and competition that we're driving with it. So I think that story kind of remains to be told. I think we've seen great activity. We've seen increasing utilization, millions of customers across banks taking advantage of the opportunities, but we're still at the initial phases of that, even on things like open banking payments. We're right at the very, very beginning. For open pensions, I mean, in the context of opening up their APIs, we still are challenged with the fact that even the largest providers haven't tended to build their infrastructure, their technical architecture around externalizing services and APIs. Ordinarily, if you see a a new digital provider come in, they tend to be pretty good that way. The modern world of microservices and APIs is very natural. But even for some of the largest providers of pension or wealth, actually can be quite a foreign concept. So I think that similar to open banking, it's twofold. One, a very, very strong encouragement and potentially a mandate by the requisite regulators, whether it be competition regulators or other consumer regulators, followed by significant investment by the providers to actually, for those that don't have modern infrastructure, to put that in place. And it's not a small investment. It's not easy. It's certainly worth doing. I think just providing a little context from the NatWest Group perspective, we have always held near and dear that we wanted to be an API-enabled bank. But like other things, there's always priorities. And open banking actually provided us an opportunity to fund and invest in modernizing how we deliver our own services. So we're now sitting at the end of the APIs we've developed for open banking. But I think it's going to take a pretty significant push to in the pension and wealth industry to have those institutions make similar investments. So that's my view.
I'm interested in your view. You're a member of the Pensions Dashboard Group. Do you think that the government needs to step in here, or regulators?
Well, I think that's already happened, really. So it's going through, the Parliament, and it's got full cross-party support. So it is legislation. The pension providers will have no choice. So very similar to open banking, it will be open pensions. I think the broader conversation, going back to a few of the other panel members, is actually, can we make it more broadly open finance? So, I'm really keen to be able to actually give consumers truly single, point of customer view, holistic advice, whatever you want to refer to it as. But it's not just your pension, is it? So, while we're at it, if we're doing open banking and open pensions, which I think, is a given, what about property? What about loans, mortgages? Why can't we take it as the stepping stone to actually make the APIs available across the board? But unfortunately, we seem to be doing it a bit piecemeal. And I know, Joe, from my time in Australia, my connections there, is that they have legislation to go from, right the way through to even the utility and the telco providers. They're going to do it in 4 stages, but, they've already committed legislative-wise to start with open banking, move to the investments and pensions, and then onwards, so I think really where we're heading as a world is to open data. And for those of you interested in looking at where, regulation hasn't been needed, look to Japan, and also look to DBS Bank, where they did as Daniel is suggesting, but they went whole API enabled and just made all their APIs for everything they do. And I really think that is where we're heading. So, but for pensions and for open banking, it's law. It's not negotiable.
Yeah, we're yet to see a date for the introduction of compulsion, when they will be made, and it could be a few years before that happens because the bill hasn't even been passed yet. So I'm just interested to hear what Aileen has to say, given you're within the sort of asset management industry, and do you acknowledge that there really is a reluctance to open up, particularly in the pension sector?
Yeah, I think one of the lessons learned for open banking, particularly in investment management, is, I guess, we all need to recognise this transforms every area of financial services. So the asset management, late ASI, we are particularly excited about open banking because we see it as a way to actually help open up our funds from an ESG perspective. So you wouldn't have ordinarily thought of that at the start, but we are going to use open banking technology to help bring much more relevant and timely and transparency to our fund holdings, which I think is really important from an ESG perspective. Because the challenge just now is, if somebody wants to understand what's in a fund, they have to go and dig out a fact sheet, which is at a point in time, and so on. So we're really excited about that, and we think that should actually help engender more trust back in the industry. And also, to be honest, we did a survey last year, and 1 in 5 women surveyed said they would invest more if they could have greater transparency in the funds that they were investing in and could see that the money was doing good as well as making returns. So I think that's really important for us. You know, don't think about it about just what you're doing as asset management, but think about, you know, the kind of the future of really what your customers need.
Thank you, Aileen. Francesco, Aileen mentioned that lessons learned, the industry has learned lessons from open banking. What do you think are the key lessons that can be learned from open banking as it evolves into open finance?
Sure. So let me think. I guess the first one is to, I think like what at the end of the day, what worked really well in open banking is that we established fairly early on the rule of the game. And so we started by setting some sort of like access right to the data. So we often think in terms of who are the providers of this data, but also we need to think about who are the recipient of this data, because consumer needs to continue to trust the whole chain of financial services. So we go back again in PSD2 and open banking world, we created the concept of regulated companies that are TPPs, and I think like that was really good, knowing that whoever is receiving my pension data or I don't know, investment data is a legitimate actor in the marketplace and is under the oversight of a regulator. I think that was absolutely great. I think we need to continue to work as an industry and understand the use cases. Here we are talking very much generally, from a very broad industry perspective, but then there is the reality of building products and building products with the right ergonomics for consumers. In that source of dialogue, I find that when you go from the regulator, politicians, and some sort of like the broader industry, and then you break it down into what the product actually do, something is often missed. We need to absolutely try to make sure that this process of discovering use cases and building technology that is fit for purpose, it's central and needs to be placed in the central part of the debate. So let's start with the use cases. Let's figure out what kind of technology do we need to build in order to enable those use cases. Let's rank those use cases from like the most valuable to all the others, and let's figure out what are commonalities and how we can create synergies and economies of scale inside of those use cases. And also, as I did before, like the ultimate validation that we are doing a good job is measuring and testing out in the wild. So let's try to have a progressive view into how we can enable this testing before fully regulating, before fully imposing all sorts of like requirements on both parties, so that we know that we are building into the right direction. We know that we are taking a very iterative approach, and we are learning our lessons throughout the journey. I think that's something that we have done in open banking, like this source of like learning. I can imagine like when Dan here will remember, like 2018, all the banks like were ready shipping their interface. The login was mainly web-based, and on mobile it wasn't really driving any sorts of like great result. And then we had to wait for app to app. So there has been learning. Now we need to ask ourselves, can we accelerate this learning? Can we have smaller steps that will tell us exactly what kind of technology at the end of the day we need to build? I think this process is fundamental.
Thank you very much, Francesco. We've got some more questions that have come in. There's a lot of interest in how the market is going to operate if there isn't any, well, in an intervening period before there is providers are compelled to hand over the data. So we've got a question from Alan here, and I'll open this up to the panel. If open pensions and wealth data is unlikely to be mandated by law soon, will open finance rely on private APIs between OBE-enabled platforms and selected other companies? I'll just open that up. Who wants to have a go at that one? How about you, Ross?
Yeah, a feeling you might have said that. It's like it is going to be mandated, right? And there's demand for it, so it's got to happen. However, it doesn't necessarily mean that'll be the best version, does it? Because and I mean this with love, but you look at all the offerings we now have of digitized banking. It's not necessarily those from the CME9 who have got the best customer offering, and that's subjective. So I would imagine, because we talk about, Sam's right, that there's 80% of the funds are owned by 12 of the providers just now. But there's going to be more people coming onto the market, isn't there? So we have to expect that things are going to evolve and change. And possibly those people that come onto the market who do offer those tools already will start to grow their business faster than those that don't offer those tools. I'm a big believer in letting capitalist markets do their work. There does need to be some government involvement to maybe give things a little kick up the ass every so often to make it happen. But it does seem to me that on this occasion, the public does seem to want it. And I've done okay working in technology and finance all my life by asking the customer what they want and then giving them it. And that's always worked out all right for me. So yeah, I'm not sure if that answers the question, but I think it will happen, whether it's legislated or just driven by innovative companies saying this is a better way to look after your money.
Could I just jump in there, Josephine, as well, just off the back of Ross? I couldn't agree more, Ross. I think look at what the consumer wants. And I think we went back to one of Josephine's questions 2 questions ago, where I think it was, do clients want this? Do clients trust to be able to see their pension? Will they actually use it? And I think just look at what consumers are doing right now, which is they log in using their app, as Daniel mentioned before, just about every day now to access their banking, to access their credit cards. They're using open finance now to sort of put together a feed, and put everything in one place. The UK as a public, I think the last study I read, I think we spend the most per head in the world online. So we're sharing money, we're sharing our credit card details, we're major users of Facebook, of Instagram, of TikTok, and everything else in between. So make no bones about it, the UK consumer wants their information. They want it on their mobile phone. They want it on their app out there. And I think far too often in our industry, we don't ask the consumer. We look to design a product that us in the industry wants. So to go back to what Ross was saying before about a common identity and what have you, I think if we almost use a bit of compulsion in terms of regulation, which is have one open standard, one open API across the industry, and then just hand it across to the market, hand it across to the likes of Ross, to the likes of Sam, to the likes of us at True Potential, to build the best kit for the consumer's identity from there. The consumer will vote. We're a consumer state here. The consumer will pick the best experience from there. But I think we need to move from thinking about what do we want in the financial services industry and go very firmly into what does the consumer do right now and what do they want in the future.
Thanks very much, Dan. I expected this conversation was just starting to kick off on this point, but unfortunately we've run out of time and we had plenty of questions to put to you. It's been very popular. So thank you very much to the panelists, and that's it for us for now. And it's time to hand back to Helen. Thank you.
Thank you, Josephine. Wow, you're absolutely right. How do I follow that? Absolute gold. Thank you. All that remains for me is to say is a huge thank you to our panel. I agree with Josephine. I think this conversation could have gone on a lot longer and should go on. So what I'm going to do with Tatiana is have a look at those questions and see if the panel will generously answer those offline, and we'll share them on LinkedIn. But I, for one, are going to be re-listening to this panel session because I learned a load as well. So what we will do is we will share this on LinkedIn, and we put it online so our friends in Asia Pac can listen to it when they wake up in the morning. But I really do think there's some gold dust content there for us all to reconsume again. So all that I would like to say before I wrap up is just, whilst you still can, please lift up your phone, make that charity donation, and we can all demonstrate payment initiation and help drive that growth trajectory of the industry we've all been talking about today. So that all that remains is a huge thank you for tuning in. To our sponsors, without their support, we wouldn't be able to put this on. And welcome on board Evershed Sutherland. They have just joined us too. So a big thank you to everybody, and I would like to wish you and your families the very, very best of health. Thank you for watching.